Good morning, everybody. It's Catherine Cooke here, leading business advisor and founder of The Engine and an expert in business entrepreneurship. For a minute then, I nearly said my maiden name. I've actually been married a year now, so I needed to say Cooke. Anyway, back on to today. With many business owners navigating uncharted waters, it is topical to discuss the tangible benefits of having an advisor. Joining me today, I've got longtime friend Bruce Cameron, financial advisor with Lifetime Group from Tauranga. Morning, Bruce. How are you down there today?
Very well, thank you, Catherine. Pleasure to be here.
Wonderful to see you again. And also my networking buddy, Adam Daly, he's a client advisor from Advice First. Good morning to you, Adam.
Morning, Catherine, and thank you for having me along today.
That's good to see both of you. And did you guys enjoy the sunshine we had over the weekend?
I loved
it. Absolutely magnificent. Yeah,
so
terrific.
While we were talking before we came on, Adam was talking about the many games of tennis that he played. Bruce talked about cricket, and for those of you who know me really well, anyone who mentions cricket gets ejected, so no more discussions on cricket today, Bruce. But anyway, look, good to see both of you here. And today we're going to be discussing the benefits of having a trusted advisor to help you navigate uncharted waters, mitigate the risk, and provide you with the filter and expertise you need when making life decisions. Clients of the Engine have said an advisor is an investment in their business and their future, not a cost. As I said in my excerpt that we put up for advertising this LinkedIn Live today, guardrails are designed to stop you going off the cliff when you're driving along in your car. Just the same as a guardrail, a trusted advisor is there to filter the emotional aspect, or to ensure that you mitigate your risk. So I'm going to start with you first, Bruce. Lifetime Group, what do you do down there, and what is a financial advisor?
Okay, thanks, Catherine. Look, Lifetime Group, we're a holistic financial planning firm. So a financial advisor's role is to understand clients, look at their assets and liabilities and financial situation, and hearing where they want to go as a business or as an individual or as a couple, and helping make their dreams come true.
And what is a dream, Bruce?
I think you better ask Adam that question. I think, to quote Zig Ziglar, I think a dream is a worthwhile goal. So you got an aspiration, might be even to do a safari around Africa. So it's having a goal plan in place to make that come to pass. Yeah.
And I typically talk about the roadmap to where you want to go. So you wouldn't just go and get in your car and start driving and not know where you're going. So it's exactly the same. Adam, I'm going to come back to you. You know, getting advice is important. How does it help your clients with the advice that you're giving them? I mean, obviously, you know, you're dealing with life and TBD and trauma, all the things that we hope will never, ever happen. And you're explaining to them it could possibly happen, and how can they be ready for that sort of situation?
Yeah, I think, Catherine, good question. I think getting advice, as Bruce knows as well, is extremely important, and it can certainly help you get to your destination where you're going. And I certainly know from myself, in terms of if I have something go wrong with my car, I don't really know a lot about my car and how it works. So I take it along to a trusted expert, along to a mechanic, and they really sort of deal with that peace of mind side of things. And they they'll diagnose a problem, they'll tell me what's wrong with it, they'll fix the car and get the car back to me as quickly as possible so that I can continue with my day-to-day activities. And I think that's very similar for the industry that we work in as well, that we like to provide that peace of mind for clients and that really trusted advice to help clients to be able to maybe to think about things that they haven't thought about before, or maybe to think about things in a different light, and just provide some valuable insight, and hopefully clients feel empowered to take some action to maybe look at those things in more detail.
I've been talking with a couple of our providers on here, obviously around mitigating risk. And, you know, people start out in business and they jump out the gate, and they might have, you know, shareholders have got no shareholders agreements, and then somebody gets sick as a shareholder or a director. Let's face it, you know, in life there's two things that are certain. One is death and one is taxes. We know that for sure. But things do pop up in life, don't they, Adam? And, you know, the unexpected will happen in terms of the life trauma and TPD cover that you do have. So how do you work out, if I'm, let's just say I approach you and I'm a 25-year-old, which I was once, not that long ago, but I approach you and I've just bought a house and I want to basically ensure that I've got cover. how would you go about, what sort of discussions would you have with me to secure that cover?
Yeah, it's more the starting point is talking around what the client's goals and dreams and aspirations are and what's important to them, because I think often we can get sort of caught up thinking one size fits all, where not necessarily it does. So it's about finding out what's important to the client and then really sitting down and looking at some of those roadblocks that could potentially get in the way, that could potentially cause some upset in their lives, and really sort of nutting down to what levels of cover we possibly need, what could actually work best for that client in their situation and given their lifestyle and at their age as well, because a client in their 20s may be very different than a client in their 40s and 50s as well. So really having that detailed discussion to really sort of break down, peel back the layers of the onion, I guess I could say, and find out what actually is important to the client.
Gosh, I'm glad I don't have an onion in front of me. I'll start crying now, but I totally get what you're saying. And also to review it, like when you take out a policy and, life changes and, you might go through buying more property or more investments or more high risk, you do need to review what type of insurances you do take out. So coming back to you, Bruce, I mean, you're obviously building people's wealth. And the roadmap for most people would be to retire knowing that they can have the lifestyle that they're used to, obviously most people, and it's the same with businesses, when they go to sell, they don't realize or they don't anticipate what that lifestyle looks like post selling a business. So Bruce, building wealth for somebody is not just, excuse the expression or pun, a one night stand. It's a journey, right?
Oh, yeah, absolutely. And I think if you use the example of that 25-year-old starting out in business, having a look at, and yourself being that 25-year-old, talking about cash flows, using the accountant to give that education around cash, what the expected sales forecast is. And then in terms of 25-year-olds, back in our day, we didn't have KiwiSaver, but if you start a KiwiSaver scheme, and you put 10% of your gross or net earnings into it over your lifetime, when you stop work between 65 to 70, you'll be able to have 75% of your pre-income earnings. Now, a lot of young people don't know that, and it's something where they can benefit from speaking to Adam, myself, or their financial advisor. And that's very simple, effective, that most people can relate to. And then as you go through life and you build up your business and your cash flow, and what's your exit plan? Are you going to have your business for 7 years, flick it? Who are you going to sell it on to? What sort of price do you expect to get to it? And business is exciting, as we know.
Yeah, and just talking about, obviously the saving scenario, Bruce, we all have different types of risk. So you've got high, medium, and low risk. It's also looking at the risk profile of the client. How do you determine a person's risk when they actually don't know themselves?
I think, in a nutshell, we have a conversation, get an understanding of their existing experience with investments. And if younger people don't have that experience, just explaining how the property market works, how the share market works, and what it means to invest and own in a company.
And just talking about how the property market works, I mean, there was an interesting article in the Herald over the weekend, and, there's been a lot of parents, just like myself, for example, who are helping their children into property and the implications behind that. So, obviously having a trusted financial advisor who's on top of the law or maybe working in conjunction with the other professionals that are required, such as an accountant. Bruce, it must be a pretty challenging time for you right now because, the property market is changing so much, not just in terms of low stock and high demand, but also the fact that, we've got this, capital gains 10-year bright line test as well. So, it must be a very challenging time for you and you must need to be looking at diversification in terms of your investment portfolios with your clients.
Yeah, I mean, they're all great points and observations. And I think that one of the things, whether it's helping children into their first home, what sort of impact might that have upon retirement or capital wealth? What sort of protection, going back to what Adam mentioned in terms of insurable risks, whether it's disability or life insurance. And property market, it's interesting. And people love to talk about it because we all live in a property, whether we own or rent. and it's long been a favourite. But I think it's important just to get a balanced perspective and balance people's incomes and affordability against their long-term goals. One of the things that one of my former colleagues at the bank was, her comment was, the bank never gives people advice onto how they could repay their loan in a timely manner. Speaking to a mortgage advisor or an advisor that's had some experience can help pay off a loan sooner and create more wealth for longer term opportunities.
Absolutely. And just right now, we are in this COVID disruption, which has been ongoing since March last year. How do you manage the financial difficulty of premiums in that business disruption? Bruce, if I can start with you there, what are your thoughts around maintaining, obviously, the growth of your portfolio, but also managing the difficulty of paying premiums when you might not have the same income coming in?
Well, they're two separate questions. So if you're making regular investments, you can always, in most cases, put those on hold, unless it's a traditional endowment or whole of life policy. And I think when Adam gets to share, he'll talk about how the New Zealand insurance companies, we're talking the life and disability companies and even the medical companies, have put together support packages to support households that may have been affected by reduction in income due to the alert level lockdowns.
Fantastic. Adam, what are your thoughts around that?
Yeah, following just on from Bruce, and a lot of the insurers have come to the party and with regards to premiums, and the insurers have said, yeah, it's difficult for clients to pay their premiums. So what some of the insurers have done, they've put in either a premium holiday or a premium suspension option. So that means that a client doesn't necessarily have to let their policy cancel, but they can suspend their policy for a period of time and not pay premiums. And often clients think when they can't afford their premiums, the first thing they'll do is cancel their policy or just to let it lapse. And often that's when they need the policies the most. And so there are ways around actually being able to keep that cover in place and not having to cancel. But also, I believe it's important to talk to their advisor as early as possible so that the advisor and the client can put together a plan that's suitable for the client and how to go forward with those insurances.
And I guess for those people that are watching this right now, it's really important to know that there are options like that, because a lot of people instantly went for a mortgage holiday. And if you're going for a mortgage holiday, that's the first thing when you need to go back to the bank to ask them for more money. They're going to go, well, how can you service another loan if you can't afford your mortgage? So look at the other things that you can put on hold or suspend, not cancel, and just talk to your trusted advisor. Bruce, I'm going to come back to you. You talked about obviously exiting out of a business, and a couple of weeks ago we were just talking exactly about that. I like how in previous discussions you and I have talked about the regularity of business valuing. In your thoughts as a financial advisor, what's the optimum time, or should this be something that you actually put in your roadmap as a regularity in terms of the business valuation?
Well, I'm going to make the assumption that most business owners are talking to their accountants at least once a year, and they've been working with their accountant for 2 or 3 years. So it comes down to having good understanding of the books, making sure that there's profitability in the business, and then asking, your accountant, how much do you think my business would be worth on the marketplace in terms of the numbers and generating? That's to give people a practical idea from an accounting perspective. And then the second point would be to go and speak to a business broker and say, if you were to market my business, how much do you think it would sell for, and what sort of buyers are there that have the skill set to run my business? Every business is different. A service business for hairdressing is different from a service business if you're a mechanic and you need mechanical skills. So yeah, that's one consideration.
Yeah, no, absolutely. And a lot of people, I'm glad that you mentioned that industries are different, because you'll get somebody in the hairdressing business who'll speak to their friend who might be in the retail business, and they'll think that they can get the same multiplier of profit from the hairdressing business to the retail, but they're actually very different businesses. And the reality is also is that I keep saying to my clients, succession planning is so key. Because if you know what your end game is, then you can build the value proposition and you can plan for that end game to get the maximum value out of it. And how do I know that? Well, I know that because I see a lot of business owners not planning for it, and then it comes time for them to sell because the health is forcing them to sell, they're just over it, or circumstances have changed, but they haven't actually planned to build the value in their business. And then I have to come along and say to them, well, realistically, you need at least a couple of years just to build some proposition, because you're not going to get or yield exactly what you want out of the business. So, Bruce, you must come across these type of conversations quite often.
Yeah, and I think it'd be timely to just have Adam speak about it from the insurance perspective, because Adam can talk about the importance of a good insurance plan and how that can provide capital and cash flow to businesses, when the owner has an unexpected life or health event. Adam, over to you.
Yeah, so Adam, let's start with that firstly, because people just think it's life, trauma and disability, but there's also key person cover, and so yeah, tell us a little bit about that.
Yeah, so there's, as you mentioned, Catherine and Bruce as well, there's a whole range of stuff. So whether it's protecting the shareholders of the business, so around the ownership piece, if something was to happen to them, but then also around the key person, and the key person could be a business owner, or it could be someone else in the business, someone who's vital to run the business, someone who's vital that maybe generates a certain percentage of the revenue, someone who's got key relationship skills, someone who brings new clients. And then if something was to happen to them, if they are permanently out of the business or they're out of the business for a short amount of time, what happens to the business? What happens to the revenue? Will the business be able to generate that revenue? Will they still have clients come in? So there's a whole lot of questions that clients need to really think about in that space.
And have you got a recent case study where you were able to help somebody to get through a life disruption in terms of claiming? Because I know claiming can be quite challenging, and especially when you are unwell, the last thing you want to do is be, going through hoops to prove that you're unwell, right?
Absolutely. And it's often that time when you are unwell that you want things to run smoothly. And often that's the time when things don't run that smoothly. In a recent example, I helped a client with a claim, and she had a condition that prevented her from working, and she had a life policy. She had what we call a total and permanent disablement policy and a trauma policy. And it kind of sat somewhere in between all three policies. So it wasn't black and white, it was very grey. It wasn't a defined trauma condition. It wasn't a life policy. The client was still alive and not likely to die within the next 12 months. The insurance company said it's not a total and permanent disablement claim. So really got in there and batted for the client and managed to get a claim paid out under the total and permanent disablement section of her policy. But it did take a lot of elbow work and a little bit of arm twisting as well with the insurer to get that across the line.
And I'm glad that you were able to help the person that had that life disruption. For me personally, when I was 27, I had an aneurysm on my brain and I lost the hearing in my left ear. And at 27, I didn't have anything. I had life insurance, but I didn't have any sort of disability insurance or anything like that. So what it did actually do for me is actually give me a bit of a shake up and ensure the future of possibility something else going wrong. So whilst it had an exclusion around any further hearing loss, which I'm not quite sure why I had an exclusion around further hearing loss because it was all gone, but the reality is it did give me that shake up that I needed. So Bruce, just coming back to you though, we talk about the regularity and life disruptions and all that, but it's really important that people can maintain the type of life that they want to have post owning a business, right?
Yeah, absolutely. And I think one of the benefits of checking in, and as a company, we like to check in with our clients at least once every 12 months, more often if necessary, but it's just making sure, are you on track? What's changed in your business? Has anything changed in your health? Has there been some external life event, maybe family situation or health, that makes a person stop and think, hey, I don't want to be doing this business more than the next 2 or 3 years when I thought I'd be doing it for the next 10 or 15. So it's being mindful of those life changes and identifying and putting in place a strategy to help people move on to the next phase of their life, whatever that may look like.
And I talk about strategy quite often when I'm talking to business owners. Like, people think strategy is just writing something on a piece of paper, but you actually do need to actually act it out and have accountability around that strategy. So, Bruce, there's a question that's just burning me right now. I've got a lot of friends who, they're playing a little bit with doing DIY share easy's approach. What's the upside or downside of doing that?
Look, I think that any education or any investment process that people take, it's all about the risk management. So, for example, if you said, do you want to buy Air New Zealand shares at the moment? You might think, hey, it's a great idea because, international travel is down. When international travel picks up, so too will the profitability of the company. I just use Air New Zealand as one example, but then you need to be able to read the balance sheet, go into the public records. What's the company's current debt? Will their earnings from the international air sales, whatever that looks like in the future, give me the expected return, both in terms of share market value and also dividend? So the difficulty when you're doing it yourself is you have to put more time into the research. And if you happen to pick a company that doesn't meet your expectations, 50-50 chance whether you make a profit or loss on it. If you take a portfolio approach, which is what KiwiSaver schemes use and other investment vehicles, you reduce that risk because you've got investment professionals that are looking over the companies, looking at the value of the companies, both future earnings, and they're doing that hard work. And yes, while you may pay a fee for it, I'm reminded of a story. Warren Buffett, one of the wealthiest men in America, had a bet with an investment manager. He said, I'll wager you $1 million that in 10 years, your investment fund might outperform the market. And the investment manager, after 10 years, had to write a check for $1 million to Warren Buffett. So it just goes to show picking shares, even as a professional, is difficult. So if people are choosing to do it as an interest, make sure they get some advice around it to see what other options are available to them.
And just talking about shares, Bruce, while we're on that topic, there's companies out there who are struggling to find people right now, and they're using all sort of sweeteners. One might be, sort of profit share approach. What are your thoughts around that? Because a lot of people go, I want to do profit share, and I think that they've got to actually update the shareholding in the company's office. But there's some pitfalls in doing that, right?
Yeah, I think, every business opportunity is unique. And I just go back to say, every person should seek advice and just say, is this going to work for my situation? And they can be wonderful and sometimes not so wonderful. So it's a matter of understanding the risks. And if you're not sure, ask questions. Pick up the phone, speak to Adam, speak to myself. As a point of contact, if you don't already have an existing advisor, talk to an accountant, an employment specialist, get advice. Most people ask advice from their friends and family, and friends and family will give the best advice based on wanting the right thing by that person asking, but they don't necessarily have the life experience or the business experience to be able to provide practical insights to do with those sort of share ownership options. And as we know, if your company revenue falls to zero, the price of your share tends to reflect that revenue zero.
Absolutely. So no reward there, right? So I always say to my clients, at the end of the day, I'm not going to be for everybody, but I've walked in your shoes. I understand what business is all about. And I've also fallen on my sword a few times and had to basically get up and keep going. So work with someone who understands what adversity is and who has resilience in being able to help you to overcome that. Adam, I'm going to come back to you now. I mentioned the word key person insurance before, and a lot of people think that key person insurance is just to insure the directors. But you can insure key people within your business, right?
Absolutely, you can, Catherine. Anyone who is key in the business, key for that business succeeding. And a client I helped some time ago was a winemaker. So they didn't own the business, but they were the winemaker in the business. And if they weren't in the business would really struggle, and it was difficult to be able to find a replacement. So they needed some cover and protection there to be able to go out to the market, and try and hunt for someone if in the event something happens to that key person. So yes, doesn't have to be a business owner, it can be someone key in that business.
And just talking about key person cover, just for a person out there, what does key person cover?
Yeah, so there's two elements to it. So there is what we call, this is a lump sum element, and then there's an ongoing regular income element. So a lump sum element may be in the event that the key person can no longer come back to work, maybe they've passed away, or maybe they've been diagnosed as totally and permanently disabled and unlikely to ever return to work. So there's a lump sum component that would be paid to the business. The business could use that money to find a replacement, meet its overhead, its cost, and so on. Or there could be a policy in place that pays a regular monthly income to the business. So the business, if a key person's out of the business, maybe for 3 months or 6 months, it means that the business can continue to operate. So money comes into the business each month, so it can operate and meet its expenses, but may be used to employ someone else as a replacement on a short-term basis as well.
And I guess the reason we have these insurances in place is A, to ensure we're not in a forced situation to make decisions that will have an impact on the business, because they become like knee-jerk decisions, right? So by doing it, we've actually thought through the process and understood what our risk is. So Bruce, I'm gonna wrap this up with you. You're the guardrail on the top of the cliff. You and Lifetime Group. What are the key benefits for somebody coming to Lifetime Group? What are they going to get that they wouldn't get elsewhere? And how long has Lifetime Group been in operation?
The company collectively has been working in New Zealand, some advisors since 1998, 2000. All they'll get an advisor that's going to listen to them, understand their seek to understand their situation, and they're going to get practical, honest advice. Now, it may not be advice necessarily that people want to hear, but it will be factual, it will be research-based, and it will give people the tools to continue to make good decisions, whether it be around their business or for their personal life.
Perfect. And Adam, same with you. You're the guardrail at the top of the cliff. You're in the advice fees. What do you and your business offer?
Yeah, so similar to Bruce, is around that service piece and being genuine with clients as well, and really finding out what is important for clients and doing the best for them, and actually being there to be along the journey with them the whole way through. So really around that service and building those relationships, really honest, trusting relationships.
And I like how you say the trusted relationships. So for those of you who are watching this, I've met both these gentlemen through the networking group, through networking, and Bruce now resides down in the sunny Bay of Plenty. And I say sunny, is it sunny down there today?
Yeah, blue skies, white clouds.
Yeah,
Should be going out for a swim at the beach after this meeting. Thanks, Catherine.
Too much information. We've got the grey skies here today, and I'm sure you've got the same too, Bruce. But look, it's a real pleasure knowing both of you, and all I can say to people out there is don't do what my nana told me to do. My nana said, Catherine, when you have money, put it under the mattress. Don't go insurance, put it under the mattress. And what I know to be true is that houses do burn down. Life does get in the way. The money under the mattress doesn't cover inflation, and you do need to have a trusted advisor, whether it's a business advisor, an accountant, a financial advisor for wealth or insurance. Build that filter between you and the decision, and I guarantee you'll be set up with a better decision, and you'll get to your destination safely, and also with the people cheerleading you from the sideline or actually running with you. So that's what we do here at the Engine. We swim in the pool with you. If you are a business right now in Auckland, you could be eligible for up to $3,000 for our coaching and up to $1,000 implementation. We'd love to hear from you. We've got an amazing pool of professional people that we can refer you out to help you on your journey. So thanks guys for today. Great start to Monday, and really appreciated the wonderful pearls of wisdom that you both offered.